Welcome back. You're watching us here on Chartbusters on CNBC TV18. It is earnings thick and fast. The other stock is Black Box on our radar. The stock has surged over 70% in the last 1 month alone. They reported their fourth quarter numbers yesterday. Revenue grew about 9%. Order inflow too spiked. We do have Sanjeev Verma, who's the CEO at the company, joining us in the studios for the quarter gone by. It's a big jump that we've seen, 9.5% year on year. Just wanted to understand a couple of things. You know, your EBITDA margins quarter on quarter saw an improvement to around 9.3%. And you did mention the last time you joined us that a lot of your orders moved into FY27 because of the geopolitical tensions that we're facing. Do those tensions still, the tensions still continue? Do those delays still continue, or have you gotten those orders?
Yeah, so two aspects. One, of course, the delays were largely because of some supply chain constraints, which is the raw materials like fiber and others, which has caught the cycle right now. And of course, more recently, of course, some geopolitical tension. But I believe we are over the cycle from a supply chain perspective. For the geopolitical tension continues to be there, but we're not affected by that as much as our North America business is concerned. So basically, we are over it at this time from a supply chain perspective.
What's your FY27 revenue growth guidance? Your exit quarter was about 9.5%.
Yes, I think we have gone public saying we are current operating margin guidance is about 10%. So we surely are focusing on getting there in our fiscal 27. We are not guided quantitative guidance yet, but I think if we look at the order book at this time, coming at the highest of $800 million opening backlog, we booked about $1 billion, expected to dramatically grow booking this year. We can expect a significant revenue growth in the coming year.
What would significant be, sir? Because you've got some inorganic growth as well. I remember the Brazilian company that you went ahead and picked up, and you're guiding that close to 500 crores will be accounted from there.
Correct.
You know, and there'll be some organic growth as well. So ballpark, should we be working with a mid-teen growth, including this 500 crores, or will it be even better than that? Should it be high teen?
It should be high teens.
High teens.
Be high teens.
Could it be 20%?
It should be 20%, yes.
20% could be the revenue growth with margins holding around 10%.
10%.
Got it. And you mentioned about the order inflows. There were a couple of data center opportunities, I think, that you were talking about. When do we see the light of day, finalization of these orders?
So we have, for this year, as I said, we have a very robust order book of $1 billion. Opening backlog very, very strong. We also have cracked into a new hyperscale. We expect our Q1 momentum to continue. So we'll see some coming in Q1 and some coming through the course of the year. We expect our order book for the year 2027 to be significantly higher than what we did in fiscal 26.
Define significant again, because, you know, we want to quantify the adjectives.
50% or more.
50% or more. Okay. All right. You also mentioned about a strategic breakthrough with a new global hyperscaler.
Yeah.
Could you give us an inkling of who that hyperscaler would be? And given the sort of infrastructure race that is taking place for digital, do you foresee that coming more into your order book as the years progress?
Yeah, I think I called out about 50% or more from order book perspective. There are only 4 or 5 hyperscalers. We serve all of them, but I think we are substantially gaining ground with one largely in the healthcare space out there. So we'll announce it when we get there. So I think net.
Can we hear that?
Next quarter.
Okay.
Okay, all right. What about any other challenges for the business? The globe is in a bit of a flux right now. Challenges you are observing on the supply side or any other challenges?
I think the issue has been infrastructure. The issue has been more fiber, networks, power. I think in some markets, it will continue to have some. I think the projects are delayed in Europe for that matter. In many countries don't have power.
Right.
So I think cyclically from our perspective, presence in 35 countries. So when we have North America, we are currently working for something in Europe. We are focused on India as well, which has just announced some mega projects. So I think we are hedged intrinsically because we're present across 5 continents. Primarily, of course, North America, where we're not seeing challenge, but of course, we're seeing some good momentum in Europe and Asia Pacific as well going forward. So that gives us a strong confidence with respect to what growth we see from booking and revenue coming up in 27.
Right. You know, I'm looking at your cash from operations in March 2025. It's negative. And a large part of the cash balancing act has been done using cash flow from financing activity. So what explains that, and what's the kind of cash generation that we can see going forward?
So I think we can see a decent cash generation going forward. If you look at from our timing perspective, the last quarter specifically, some projects getting delayed. So we had a heavy quarter with respect to our March, and you see that in our AR being high at this time. We also did a very large deal from our partnership of Wind River. So we expect as we get into fiscal 27, our cash flow to ease out because the collections will start to happen, and the operating cash by the company would be significantly higher than what you see now.
What should typically the EBITDA to CFO ratio be, according to you? Because right now, as I speak, your reported EBITDA is roughly 75 to 80% higher over the last few years as an average as compared to your cash flow from operations.
Yes, so I think going forward, a large part of EBITDA will drop down into our PAT, right? So therefore, about 80-90%, we don't expect all our fixed costs to remain. So therefore, the conversion of EBITDA to PAT in fiscal 27 would be...
What we're talking about is cash flow to EBITDA. How much of that will flow down? As of now, there is a gap out there. The EBITDA number is growing up well, but the cash flow is not going up at the same pace. That's the point.
Yes, we'd expect at least 70-80% of that to flow down going forward.
All right. And the promoter stake, that has been coming down over the last few quarters, understandably to accommodate some of the funds, etc. as well. Now, just shy of 70%. Last quarter was 70.11%. The quarter before that was 70.24%. So every quarter there's been a 0.2, 0.3% sort of dilution by the promoters. Is that likely to continue?
I think it's on the contrary. The promoters participated in the pref that we did for 386 crores. Right. They brought in 200 crores, and I think that caused a little bit of a 0.1% of dilution that happened. The promoters are highly invested in the business. Everybody subscribed to our warrants for the pref issue that we did for 386 crores, with promoters bringing in 200 crores, right? So I don't see that going forward. I think the confidence of promoters is extremely high. That shows back on their investment of 200 crores that happened a couple of months back. Right, so.
Okay, all right. Since things are looking so good, have you seen a lot of institutional interest? Actually, there's one mutual fund, which is Quant. They're the big ones in there. Well, have you received a lot more requests from domestic and foreign institutions?
I think we continue to meet them at this time. We're also heading towards our capital day on 1st June that we have put through across, meeting a lot of investors. And I believe a lot of investors' confidence is being shown up now at this time. We expect that to improve as we go forward. From management perspective, execute well, execute well, and execute well.
Execute well, execute well, execute well. I'm just looking at some of the numbers that you're speaking about execution. Assuming mid-teen sort of growth taking place next year, you get to about 7,500 crores on the top line with 10% margins close to 750 crores, roughly 70% of that flowing down to your EBITDA as well. That takes you to about a 500 crore PAT. Market cap of close to around 18,000 crores. You're, not particularly cheap, still at around 35, 36 times.
Yeah, I think I would not want to speculate on short-term stuff.
I'm speaking purely from a
perspective of, I think we are a direct beneficiary of the AI-led infrastructure growth. I think we are at the cusp of that. We are among very few companies globally who can deliver this large-scale AI infrastructure. The market bakes in what the market bakes in, and from that perspective, but highly positive for fiscal 27.
We appreciate you coming down to the studio and giving us all of those details. Wishing you, as well as your team, all the very best, and all the best for that Investor Day. Maybe there's a fresh update. We look forward to having you back on the show.
Thank you, Nigel.
Okay, all right. Time